So welcome to the National Fair Tax webinar. I am your host, Mark Maneri, joined by my co-host, Larry Walters. And we've had a lot of people join us in the last few minutes. And so we just want to give everyone a quick idea of what will happen again tonight. We'll do a 25-minute overview of the main fair tax merits, and then we'll take a break, answer your questions. Then we'll review our special topic, which will take about 5 or 10 minutes, and then finish off by answering your questions. So two ways you can get our attention is by putting up your hand, by clicking the hand on your control panel, or of course writing in your questions at the bottom. We love questions. We love an interactive audience, so please go ahead and do that. And just so everyone knows, you're all muted right now. We've got a lot of people on the line, and we're going to keep it that way unless you put your hand up, and then during the question time we will unmute you. You'll have the floor, and we'll have a great dialogue. All right, so we are going to go ahead and get started here. All right, so one of the great things about the fair tax that we always like to say is that it is simple, it is fair, and it is transparent. And as we get into tonight's presentation, you're going to see how the fair tax has been created in a way that really does create fairness and simplicity and transparency. And this is just one of our favorite images to show, is that our current federal tax law is now over or approaching 75,000 pages. Clearly not a single person can understand and own this in its entirety. It's impossible. It's too big. It's too cumbersome. And what you'll see as we talk more tonight is that our current tax system, it really inhibits growth. And so we want a system that's fair. We want a system, of course, that funds our federal government in a way that can provide for our country in the way that we need to provide for it. But we also want to do it in a very proactive, very capitalistic way that supports growth. And that's exactly what the fair tax does. And we're going to show you exactly what that looks like. So our current tax code is convoluted. It punishes growth and expansion, inspires the wrong behavior. There's a lack of transparency, horribly inefficient. It impedes privacy. There's winners and losers. It's time intensive and laborious. And what we're going to do is systematically show you each one of these 7 points, how the fair tax overcomes these challenges and completely wipes it out and puts us, our country, and every citizen in a better financial position. Excuse me. All right. So the fair tax, if you are brand new to this, is legislation that exists right now in Congress. We have more support for this than ever before. Every time there's a new Congress in session, we have to reintroduce it and then get co-sponsors to sign on again, and we start from scratch when that happens, as does every piece of legislation when it enters the floor. Well, the fair tax currently has 84 co-sponsors. 9 are in the Senate, and 76 are in the House. Now, we've got a ways to go, but never before have we experienced as much momentum as we have right now. And so it's a really exciting time for us, and we're starting to gain a lot of traction. So now is the time to get the word out. We're going to talk about that as well. Okay, so we saw before that there's 75,000 pages of our current tax code, convoluted, cumbersome. Well, the fair tax is extremely simple. It is exactly 131 pages double-spaced. You could go to the website fairtax.org and actually download and print this legislation out and read it and understand it. And that's one of the most brilliant things about this. And you know what? I just love the idea that simple is better. And the fair tax covers all the basis for this massive country and system that we need to fund it in 131 pages. That's pretty special. All right. So if you think about our current tax system, it really punishes growth. Now, why do we say that? Well, if you think about it, every time an individual or an organization or a business makes more money, what happens? The government takes more of it away. And so we're inspiring the wrong behavior. And so the fair tax is a consumption tax, not an income tax, and you only pay taxes on what you spend, not on what you earn. And so what it will do is it will eliminate all federal income taxes and repeal the 16th Amendment. And so what will happen is all of a sudden the tax on businesses go away. The tax on individuals' income goes away as well. Payroll taxes go away. Capital gains taxes go away. And we have a national retail sales tax. So every time we go and we buy a new good or service and we check out, the fair tax is embedded in it and the government gets to collect. And by the way, the fair tax is revenue neutral to what the IRS collects today. And so what that means is when the fair tax is implemented, after the first year of it being implemented, the federal government will have collected the same amount of money as it collects right now. And it's only going to grow as the economy gets stimulated. So we'll explain this in greater detail. But first, let's look at the benefits of the fair tax for business. Okay, so first and foremost, 13 trillion, that's trillion with a T, dollars in global personal and corporate assets, cash, money, wealth, assets are parked in offshore banking centers. That money gets repatriated and comes back into our economy organically. And the reason why that is because business owners and businesses, and the people behind the businesses, well, guess what they want to do with that money? They want to leverage that money and do with it what they know best, and that's their business and businesses. And so right now, that money gets shielded for tax purposes, right? To avoid capital gains taxes, to avoid corporate and personal income taxes. Well, imagine those taxes go away, and there's no more Uncle Sam collecting on business and personal income and interest income and capital gains from growth on financial instruments. So imagine that's the case, and now you can take all this money and bring it back into the United States, into your bank account, and you can grow, and you can expand, and you can leverage it. And that's exactly what will happen. It's estimated that $1 trillion of this money will come back organically into the United States and be used for the expansion of businesses. Like that's an incredible amount of money, right? So the next thing is that the U.S. becomes a corporate headquarter haven because we'll have the lowest effective tax rate of any country in the country, which means corporations from around the world are going to think about relocating their international headquarters here. And when they do that, infrastructure will be built, buildings will be built, they're going to need to hire staff, construction workers will come back in full force, and it's going to be jobs. It's just going to be an amazing explosion in our economy when the fair tax gets implemented. And of course the underground economy, estimated at $2 trillion right now, they pay their fair share. So all those illegal undocumented workers and people here, you know, every time they go buy a banana at the grocery store, a new pair of designer jeans, or a new house or a new car, whatever it is, they pay their fair share. And so what will happen is that as jobs increase, the opportunity for jobs increase, as businesses expand with this wealth that gets brought back into our economy, people are going to go back to work, and they're going to get to keep their entire paycheck, right? So if you make $5,000 gross today, but maybe you only take home about $4,000 of that net pay because it gets of tax withholdings by the government, well, that all goes away. And with the fair tax, if you make $5,000 gross, you take home $5,000. The average American's income is going to go up by 29%. It will be the greatest increase in disposable income that we've ever seen in the history of this country. And so what are people going to do with that money? Well, they're going to go out and spend it. They're going to go out and invest it. And they're going to save it to make big purchases like homes and bigger high-ticket items. And so this economy is just going to explode when the fair tax gets implemented. Okay, so what we've seen so far is that we've got a revenue-neutral way to fund our federal government. We do it by putting a tax on consumption and purchases as opposed to income. It's going to be a massive economic boom because people are going to make more money, they're going to spend more, invest more, and save more. Businesses are going to expand. So these are all brilliant, brilliant things that don't exist right now. Well, the other cool thing is that there's going to be full transparency. So let's say you go to the store and you buy a pair of designer jeans for $100. Well, the fair tax is embedded. It's inclusive, which means when you go to check out, you don't pay, well, the fair tax rate, just so everybody knows, is 23%. And so you don't pay $100 plus 23% or $123. No, you pay $100. It's included. And so what that means is on your receipt, you'll see that the jeans are $77, and the federal consumption tax is $23 out of that $100, right? And so you get to see the tax rate of 23% listed right there on your receipt. And of course, if you go a month later and buy a new pair of jeans and you see that the tax rate goes up to 24%, you're going to know that. It's totally transparent. Whereas right now with the 75,000-page tax code, Congress manipulates that every day. We never know anything about that. So there's absolutely no loopholes. We've got one simple tax to the tune of 23%, as I mentioned earlier, be listed on all of our receipts. Very, very simple. All right. So we talk about our current tax code being horribly inefficient. What we mean by that is that, first of all, it costs over $10 billion with a B, $10 billion to fund and run the IRS right now. And for every dollar that the IRS collects, it costs them 25 cents. And they're only collecting about 75% of what they should be collecting. So if you think about those statistics right there that I just shared, it's incredibly inefficient. Well, the fair tax is incredibly efficient, right? So first of all, the states are going to collect from businesses. And since they're collecting from businesses instead of households, if you look at the second bullet point, well, we're only collecting from about 18 to 20 million businesses as opposed to 120 million household returns. So automatically we get 80% more efficient, right? And then 45 states currently collect a state sales tax. The infrastructure is already set up. So we're going to leverage that infrastructure and use it to collect from businesses. So what will happen is there will be a state sales tax bureau set up, and it will leverage the infrastructure, as we've mentioned already, of the current state sales tax systems that are already in place, and they collect from all the businesses every month, and then they send that revenue or that tax revenue on into the Department of the Treasury, right? And so for the businesses, there's just one simple form to fill out. It's, here, what are your gross receipts? How much money did you take in over the month? Multiply that times 23%, and that's what you're responsible for sending in to the federal government. That's it. So a very, very simple system. Certainly one that will have to be acclimated to, but the fact that we only collect, we have to collect from 80% less entities is really smart. All right. So we've already said the IRS costs over $10 billion now, $13 billion to operate. Only 75% of what it takes in. And as we mentioned earlier, the fair tax would actually be eliminated within 3 years under the fair tax legislation. So saving American taxpayers $13 billion a year. Pretty cool. So we know that our current tax system impedes privacy, obviously, because we fill out these convoluted and very detailed tax forms. What our government knows what our income is and where it comes from, and all the different places that we get income from, and child support, and all of that. And many would believe that that's really an invasion of our privacy. Well, our privacy is protected with the fair tax because you simply pay your taxes when you make your purchases. There's no filling out of these detailed income tax forms. So very, very simple. And April 15th, as we say, just becomes another spring day. So right now, there's winners and losers with our system. And what we mean by that is that right now, the wealthy individuals that can afford, highly paid tax experts, businesses that can afford that, they have figured out ways to exploit tax loopholes. And of course, we heard about this with Mitt Romney, right? Somebody that makes $40 million a year, but his effective tax rate is less than some of the lowest income earners in the country. And so there's winners and losers. Well, under the fair tax, there's total fairness. Like, you spend more, you pay more. That's it. And everybody pays the same rate. So very, very simple. And then, of course, a really, really important and valuable piece of the legislation that was woven into it is called the prebate. The prebate assures no one pays federal taxes up to the poverty level. So what we mean by that is the Department of Health and Human Services, independent of the fair tax, by the way, have set what they call poverty spending thresholds. And so you can see, if you look on the right, under annual consumption allowance, based on the size of the household, through a lot of mathematics and economics and a lot of surveying and tracking, the Department of Health and Human Services has suggested that if you spend anywhere from $23,000 up to $47,000 and change, you're spending at the poverty level limit. In other words, all the money that you spend during that year likely went, 100% of it went to the basic necessities of life: food, shelter, clothing, transportation, and medical supplies. And so what the fair tax does is it rebates at the beginning of each month. That's why we call it the prebate. Every single qualifying household for the fair tax they will have paid up to the poverty level limit of spending. So here's an example. Let's say a 2-adult household with 2 children, so there's 4. Look at the green line. So it's a 4-person family. They'll spend $31,380. Well, if you multiply that times 23% over the course of a year, they will have paid $7,217 in taxes based on the fair tax, taking 23% of their income every time they spend it. Well, when you divide that number by 12, that family of 4 will receive $601 in their bank account every single month, direct deposited, as a reimbursement in advance for the money they'll have spent that month on the basic necessities of life, or poverty level threshold spending. All right? And everybody gets this. Doesn't matter if you make $3,000 a year, $30,000 a year, or $30 million a year. It doesn't matter. Income is not a factor here. It's about a qualifying household with valid Social Security number. So really, really important piece of the legislation that was written in, because we want to assure that lower income Americans, especially those that don't pay any taxes right now, are in a similar boat under the fair tax, that they've got some tax freedom, if you will, because of their lower income earnings, and they get rebated, as everybody else does, the amount of money they will have spent in taxes on the basic necessities up to the poverty line. All right. What about prices? Well, think about this. Right now, we're actually paying not only income taxes, but a sales tax, and the reason why is because every time we spend money at the cash register, we're paying the business's taxes. And, you know, every business owner knows that what they do is they've got a margin that they want to make. They want to make a profit. And so there's costs that go into to producing their product or delivering their service. And one of those line items are their corporate income taxes, their business taxes, as well as the cost to comply to the tax code, right? Accountants and tax people and you know, software and et cetera, et cetera. So these are just expenses in a business that get factored in and reflected in the prices that we pay. So we're paying really a sales tax right now because we're paying the business's income taxes. Well, we call this the embedded tax. It's approximately 22% of the cost of all retail goods. That's a lot. That's a lot, right? So what will happen when the fair tax gets passed, the embedded taxes, or the cost to the consumer, go away. Why? Because federal income taxes go away, corporate income taxes go away, costs to comply to the income tax code go away because there is no income tax, and that 22% goes away, and the fair tax of 23% replaces it. And so it's really important to know that taxes or prices aren't going to go up by 23%. No. No, no, no. The embedded tax or cost of 22% comes out. Fair tax of 23% goes in. It's not a wash. We expect prices to increase in the first year by about 5 to 9%. But guess what? The average American's income is going up by 29%. Every American citizen and business will be in a better financial position because of the fair tax. And we estimate that prices will largely be reduced after the first year because the marketplace will become competitive, businesses will have more money and more capital to expand, and one of the best ways they can be competitive is by cutting their costs or and lowering their prices to capture more market share. All right, so we've talked a lot about, we know what the fair tax is. It replaces income taxes and capital gains and payroll, you know, all the FICA, Medicare, Social Security, estate gift taxes, alternative minimum, all those taxes go away, replaces it with a sales tax. We've seen all the economic benefits. We've seen how much more easier it is to collect. We've seen how it's fair, it's simple, it's transparent. It's a winner. So why wouldn't anybody want it? Well, guess what? The only people that wouldn't want it are people whose income and ability to manipulate and do their job in a way that has no transparency or is affected. And you're looking at those people on the screen right now. Right? So 50% of lobbyists are tax lobbyists. So if corporate income taxes go away, guess what? There ain't no need for these 6- and 7-figure lobbyists that corporations put on a retainer every year. So they don't. So their jobs are threatened. And of course, politicians are being told by lobbyists that if they support the fair tax, all those contributions to their reelection campaign go away. And of course, politicians like our current tax code because they get to manipulate it and pay for congressional or district projects without us knowing about it. So it's a real unfortunate system that we're living in right now, guys, and we've got to change it, and the fair tax will do that. It'll be a very large shift in power back to the American people, and politicians have a problem with that. We've got to put a stop to it, and we do that with our vote. All right, so what we're going to do right now is we're going to pause, and we are going to take a bunch of questions. So I'll ask my colleague Larry to unmute himself. And actually, we've only got a couple of questions right here, so I think we've covered a lot. So the first question, Larry, is would rents be taxed?
Well, of course it would. There's nothing that is exempt from the fair tax except the cost of education. That's your tuitions and lab fees and such. Or if you're already in the workforce and you take a class or a seminar or something to improve your job growth potential, that would not be taxed. And used goods, buy a used car, not taxed. So if you want to move from a Chevrolet to a Cadillac, get one that's used and there's no tax on it. Mark?
Yeah. All right. Does the fair tax eliminate tax exemption for certain groups, such as agricultural or religious organizations? That came in from Mike.
Eliminate tax exemptions for certain groups. Well, no, it doesn't. Well, actually, it does because there's no income tax. And if you think about it, ladies and gentlemen, when you take an exemption, what you're saying is that you spent $1 and because there's been withholding from whatever your income is, you're going to claim that exemption of the $1 and hope to get 15 cents or 25 cents back. Since there is no withholding of any form, there's no taxes being withheld, then there is nothing to take an exemption against. So that exemption does go away. However, those non-exempt organizations or those exempt organizations have the benefit of not paying taxes, sales tax, on anything they purchase as part of their services that they provide. Or if they're buying, for example, food that they're giving away to the homeless, the food that they purchase would not be taxed. They would have a tax exemption certificate so that when they go to the store, they are not charged the tax when they buy that. And they would still qualify for the prebate as an organization. Mark?
Yeah, thank you, Larry. All right. By the way, we often get the question, hey, what happens to charitable contributions? Like, don't people donate tens or hundreds or thousands or millions of dollars just so they can get a tax break? And the answer is absolutely not. People donate to charities for the most part because it's a cause that they believe in. And so when the average American's income goes up by 29% or more, guess what? They're going to have more disposable income where they can make contributions to the charities of their choices. All right. From Luis, how does the transition between the current tax system and the fair tax work? For example, how do contributions and earnings in Roth and pre-tax accounts be taxed? So I'll answer this first, Larry. So we're going to get into a little bit of this in a special topic, but yeah. So for people who invested in, for example, a Roth IRA, where the taxes are taken. Actually, I forget if the taxes are taken in before or after tax dollars. I think it's after tax dollars there. But if they're pre-tax accounts, when they come out, they're not taxed. So there's a lot of investment instruments that are going to be subject currently under our current tax system to taxes once they come out and they get cashed out. Under the fair tax, once that gets implemented, those tax penalties go away. Larry, do you want to say anything else about that as well as the transition?
Well, I'll talk about the transition. I think you covered the retirement funds. And just to put this in perspective, in simplicity, there is no form of income tax on any form of income, period. So if you're considering, well, if your question is, what's the tax on such and such, that under the income tax you're being taxed, but under the fair tax it's not going to be taxed, okay? As far as the transition goes, because of the simplicity of the fair tax, the transition is something that happens the actual transition physically happens in the 1 second period between 11:59 p.m. and 12 o'clock a.m. between December 31st and January 1st of the year specified when the fair tax legislation is passed. There will be time prior to that for the retail establishments, and that doesn't necessarily mean a Sears or a Costco, but even if you're a business, a small business that produces things wholesale, but you also have some retail clients, it's only the retail aspect of this that you would be concerned with. What happens then is that when the tax is implemented, all you have to do is change your software on whatever you're using, whether you're using QuickBooks on your computer or you've got a cash register system in a larger facility that automatically calculates the taxes, and they'll now be collecting a 23% sales tax for the national account. And if they're in a state that happens to have a state sales tax, they'll be collecting that also. Both of those taxes would be listed separately on the cash register receipt. Mark?
Yep, thank you, Larry. All right, Rob asks, what is the cost of running the prebate? That's actually an interesting question, Rob. I'll do a little math for you right here, or ask you to do it when I give you the numbers. But basically, if you're looking at, well, first let's just establish the fact that the prebate is covered by the fair tax. In other words, the amount of revenue collected from the fair tax will cover the prebate. So it's not coming from anywhere else. It's, you know, the federal government, that's the money that the federal government collects through the fair tax, and when the prebate gets issued every month, it'll come from that general fund. Now, so what is that number? I mean, you're basically looking at 120 million households times whatever the size of their household is. It depends on what the average number of size of a household is. For a household that's about 4 people, you've got about $7 grand going back to them. So multiply that times $120 million, or sorry, 120 million households. And you're going to get somewhere in the billions, but remember that the fair tax is going to collect, I don't know, I forget how much, Larry, but it was probably in the 2 to 3 trillion range, is it not?
I don't know what that number is going to be, but I think maybe Rob was asking that question from a different perspective.
Okay.
In addition, I think he was asking, what's it going to cost? He's saying of running the prebate, which means the administration of the prebate. We don't have that number, Rob. We do know that the Social Security Administration already sends out millions of checks every month. So they have the infrastructure to handle the prebate, and they're the designated administrator of the prebate. How much more it will cost? A few people, no doubt, but more than anything, it's going to cost some larger computing power so that they can get all of the checks, their Social Security checks and the prebate checks and whatever other checks they're producing each month done in a timely manner. But I'm sorry, I do not have a specific figure on that. Mark?
Yeah, thank you, Larry. You're welcome, Rob. Rob says thank you to Larry. What happens to state income taxes? Well, nothing that's written into the fair tax legislation. The fair tax legislation is strictly at the federal level. It only addresses federal taxes, period. Now, it is likely that states will follow suit. In fact, we may get a state fair tax-like tax system before we even get a national one. There's several states that are very interested in this. So it's likely that the states may eliminate their income tax and replace it with a state sales tax, or increase their state sales tax a bit to make up for that if they've already have one. But under the fair tax, it only addresses federal income taxes. So I think that's pretty straightforward. All right. Actually, you know what? Let's do this. We've got a few more great questions, and I know there'll be a few more. So let's do this. Let's pause on the questions. Keep them coming, though, guys. And we're going to review our special topic. which is a good one, the impact of the fair tax on seniors. And this will just take us a few minutes, and then we'll get right back to the questions. So stay with us here. All right, so now I have to come clean here. The fairtax.org website is a brilliant resource. They've got a lot of white papers with a lot of research, and there's a white paper on just about everything in terms of how the fair tax impacts people, entities, or industries. And you can go there and find out just about anything. And I took this right from their website, and why recreate the wheel? So here we go. So first of all, the fair tax repeals the taxation of Social Security benefits and adjusts Social Security cost of living to preserve the purchasing power of Social Security benefits. Larry.
Yes, sir.
How would you put that point in layman's terms?
You just caught me trying to sneak off on the web here and look something up. Okay. What are we talking about?
Well, we're talking about this point of how the fair tax positively impacts seniors, and I want to make sure that people really get this first point.
Okay. The bullet says it real easily, but the fact is, although the tax withholding, the FICA and Medicare taxes, those withholdings go away. The 23% rate of the fair tax has been calculated at 23% in order to be able to make up for that loss of revenue. So those funds, Social Security and Medicare and so on and so forth, will still be funded. In fact, the funding is better under the fair tax than under the income tax, because under the income tax, only those who are legitimately working, by that I mean they're having withholdings from their paychecks, they're the people that are funding those entitlements today. Under the fair tax, everybody that buys anything will be funding the fair tax. Even as Mark had mentioned earlier, those who are visitors to our country, whether they're legal or illegal, will not have the benefit of a prebate. So they'll be paying the fair tax on every dollar spent. And that's how the funding is done for Social Security and Medicare. I hope that answers it, Mike.
Yeah, I think you did. Thank you. The fair tax.
Oh, one thing else.
Yeah, go ahead.
One thing else. I'm sorry. I just read the last part of the bullet. The fair tax also modifies, this is the legislation I'm talking about. The legislation actually modifies the COLA formula to account for the increase in fair tax that they would get, that seniors or whoever's collecting the fund, the payment, would be paying because of the increase in their spending capability. So seniors, for example, will not see any effect on their spending power, on their purchasing power because of the fair tax. Mark?
Mm-hmm. So we end the gift and estate taxes, so when that money passes on to heirs, no more Uncle Sam getting their hands on it. And the tax planning that goes, or the cost of the tax planning that goes with trying to avoid that. Yeah, fair tax ends all record-keeping income tax filings of any kind, and it does this for everybody, by the way, and so therefore insulating them against the high costs of tax preparers. It ensures Social Security's soundness by funding it with a progressive, broad-based national sales tax. So we kind of say that in the first bullet point, but we ensure that Social Security lives on much further into the future, if not into perpetuity, because the federal government will actually collect more money under the fair tax as the economy grows. The prebate lets seniors purchase what they deem as livable essentials tax-free up to the poverty level, as it does for everyone, but the seniors get a brand new income stream coming into their household, as does all qualifying American households, right? And of course, used goods are tax-free. It delivers a tax holiday on IRAs and other tax-deferred plans. We already mentioned that. Seniors especially are going to get a windfall for that. Sell your home, pay no capital gains, just like it would for everybody. It lowers the average remaining lifetime tax rates. That's true. It generates an economic boom, easing future budget pressure on Social Security and Medicare. and it ensures your grandchildren have the same opportunity that you did. So, there's a lot of these, of course, that are applicable to everybody equally, but certainly there's points in here that are really, really spot on for seniors. And there really isn't a person. There just isn't a person or entity or organization that doesn't benefit from the fair tax. Seniors for sure get a big benefit. All right, so we've got a bunch of questions to answer, so stay with us, but we want to share with you, these are some great websites you can go to. I've mentioned fairtax.org a few times. The FloridaFairTax.com is a wonderful website that's been put together by the folks here in Florida where Larry and I reside. And see us on Facebook and spread the message there, Facebook.com/fairtax. All right. So let's get back to our questions and get rocking and rolling on these again. All right. So a question came in earlier from David who says, I understand that the Tea Party Patriots has a campaign to repeal the 16th Amendment. Have you made contact with them to use the fair tax in their efforts? Wouldn't it make sense to combine the effort and kill two birds with one stone, so to speak? Yeah, it would. I'm not sure of any formal collaboration, but Larry, do you know about anything done in conjunction with Tea Party Patriots?
Absolutely. And that's what I was trying to research when you caught me before. Tea Party Patriots is one of several organizations. FairTax, Americans for Fair Taxation is another one, part of a PAC that has been established by the founders of Americans for Fair Tax, Son. And I was trying to find the name of the actual organization. But the bottom line is, yes, there is collaboration between the Tea Party Patriots and us to repeal the 16th Amendment. And it's just another front, if you will. We're taking care of educating the population about the benefits of the fair tax, and this other front is going after getting a repeal of the 16th Amendment as a direct effect of their activities. As many of you know, the fair tax has sister legislation that repeals the 16th Amendment also. We don't care which one of these wins, as long as the 16th Amendment gets repealed, and in addition to the repeal, the new amendment, which repeals the 16th, also states and forbids Congress from ever taxing income. So we're trying to take both of those avenues, and great question, David. Thanks for it. Mark?
Yep. All right, this question comes in from Mike. I've heard that state and local income taxes will not necessarily be changed by the fair tax legislation. True, we've already addressed that. What is the likelihood that they will follow suit? We've really already addressed that. The likelihood is very strong, and as I mentioned, some may even do it in advance of getting it done at the federal level. All right, James asked about retirement accounts set up to give tax-free disbursements. Those accounts are taxed when the money is put in, but when the fair tax is implemented, these people would then be taxed a second time when the money is spent. Is there a provision to prevent this double taxation for people who paid into these accounts pre-fair tax? The straight answer is no, James, but at the end of the day, they've gained more purchasing power, and so, I understand the question and the concern, but at the end of the day, there's still better purchasing power with this money that comes out, and the person's in a better financial position. So, Larry, I don't know, is there anything else you'd say about that in greater detail?
No, not really. I would like to know what kind of an investment program does that? Takes the tax out and puts it into a tax-free, something that's a tax-free return, such as a Roth. I just like to know what's the vehicle called? I mean, it's not a 401k. What is it? And what is being purchased or invested in with the money that's being withheld from the paycheck and taxed at the time of withholding. Mark?
Yeah. All right, from Peggy. In the FairTax Overview fact sheet, reference is made to the possibility of the state property taxes also being replaced by a broader state sales tax. Has there been an economic study regarding this issue developed by fairtax.org? Not formally by fairtax.org, Larry, that I know of. I don't know if there's any formal study that's been done, but certainly we know that several states, two of the biggest, California and Florida, fund their governments via a state sales tax, not an income tax, and they're two of the most robust economies in the world, actually. Is there anything else that you would comment on that?
No, well, I would. What I would say is that Americans for Fair Taxation, when they invested the $20 million that went into the research which resulted in the fair tax legislation, did not concern itself with what the states would do. The mission is to replace the federal income tax with the new federal national sales tax. And hopefully the example would be something that the states would look into and then on their own take steps that would benefit them the most. Mark?
Yeah. A question that often comes in, by the way, Larry, is what will happen with the internet economy, so to speak, and what about people that purchase U.S. goods from other countries? So
Okay.
Can you address any of that?
Yeah, I'll take the second question first, and then you can remind me what the first question was. Anything that's purchased outside of the country, when it comes through customs, they are going to be charged with collecting the sales tax on that. So you can't avoid it that way, okay? And the first question was?
Just the internet in general. How
The internet, sure. Internet purchases are going to be taxed by the national sales tax. And some of you might say, oh my gosh, that's terrible. But I'd like you to think about it in broader and what I think are fairer terms. Right now, many of the internet resellers, have zero in the way of overhead expenses. They are not even purchasing product. They are just brokering product. And people are buying it because it's easier to get on the computer and order something. But those same businesses are hurting the local economies in your community and in my community, because these folks with the brick and mortar stores and the overhead of electricity and insurance and salaries, payroll and whatnot, it cannot keep up with somebody sitting at a computer in their home, and if you order something from them, they have it shipped from whomever is supplying it. So I think it is a very fair thing, and it will help our communities reestablish themselves as a viable business for us. That will create jobs in our communities, and it will help the growth in businesses and jobs and homes wherever it is that we might be living. And I hope you can see it in those terms. Mark?
Yeah. Question from Peggy. Will teachers who receive a state teacher pension but have not paid into Social Security, will they be paid the full amount of Social Security when they retire at age 66? Currently, there is a federal government offset which penalizes these teachers, as well as a windfall elimination provision which affects their spouses. Will all of this go away and teachers will be able to receive the state pension and Social Security? I have no idea.
That's a great question, Peggy, and I don't know if I have a really great answer for you, but trying to think about it logically, I believe that whatever the state's pension is, that is not going to be hurt. You're going to still get that in full. As far as what you get from Social Security, I strongly believe that it is going to remain on the same calculation that it remains now. Beyond that, I don't have an answer that I can say, I bet you my last $10 on. Okay, Mark?
Yeah. This question comes in from Mark, which says, and this is really important. I'm glad you wrote this in, Mark. Mark writes, any of my representatives, these two are Chris Murphy and Elizabeth Etsy, Mark, write in what state you're in, by the way. Both have responded to my inquiries about fair tax with patronizing statements saying the fair tax would actually, quote unquote, hurt the very people it intends to help. How can I get through to these puppets to let them know I'm serious and a bit more intelligent than to believe what they say? What can I do to put them on notice and to give the fair tax a fair look? I feel exasperated about our system. I know how you feel. Mark is in Connecticut. So, yeah, go ahead, Larry.
I was going to say, I see that he's from Connecticut. Mark, if you will send me an email, I'll send you a diagram, a chart that was created from one of the research papers that were provided by the professors that, one of the professors that was doing some of the work on the early research. And it will show that over our lifetimes, and it doesn't matter what the income level is, we will all be experiencing a lower lifetime tax liability than under the income tax. Now, you do have to understand that this is a static chart, and so it takes the income tax as it is today, and it takes the fair tax as it's proposed today, and it runs the numbers out based on today's knowns. Okay, things could change tomorrow that would throw this thing upside down. They could raise the income taxes, they could raise the sales taxes, and we don't know how that's going to go in the future. But based on that, it does show that we all have a lower lifetime liability. That, I think, defeats the argument that it hurts those people that it is intended to help. Now, the other thing I'd like you to consider is that under the fair tax with the prebate, that makes the presumption that a person, and I'm going to take a specific calculation here, the person at poverty level, regardless of their size of their family, whether it's a single or a family of 15, the people at the poverty level are spending only what they earn, and that's their poverty level income and spending. However, if they are working elsewhere and receiving income that they are not reporting, they're going to be taxed on that expense, just like everybody else is. So they will be contributing to our nation's well-being, just like you and I would be contributing. Okay? So you got to remember what the presumption is. If they're living at the poverty level because that is their income, that's their expenses, then they have zero tax liability. If they're living below the poverty level, they still get the full prebate, but that means they've got some extra spendable money. That's the same as a tax credit that they might be getting today. Mark?
Thank you, Larry. And by the way, well, let me read Peggy's statement. She just wrote in, thank you, Peggy. Campaign for Primary Accountability is the organization that Lindbeck III is backing in order to help primary candidates supporting fair tax to have a chance against incumbents, both Democrats and Republicans. And here's the point, because Mike wrote in, hey, I'm in Speaker Boehner's district and I'm not getting any real answers from him. How do I hold him accountable? You know, the best way to do it, guys, is with our votes. And look, yes, you know, the fair tax has a strong Republican backing, but straightforwardly, a lot of those are people who are paying lip service to their constituents. And they're co-sponsoring it, and I'm sure if it came down to it, they would vote for it, but they're not an advocate. They're not walking the floor and saying, and corralling their peers and saying, hey guys, we got something big here we got to do. Like, get your act together and be a co-sponsor. That's what we need. And I don't care, quite frankly, me personally, when I look at how I vote, the fair tax and economics is my personal #1 issue. It may not be yours, but it is mine. And if I see a candidate that supports the fair tax and they have it on their website and in their literature, and I know they're an advocate and they're saying that they're a proponent of the fair tax, boy, will they get my vote. And in fact, Mark just wrote in, how do we know who to vote for? Well, don't just let people pay lip service to it. typically, and almost you can really take it to the bank. The candidates for Congress that have the fair tax in their literature and on their website, and they're willing to put in writing that they're a supporter of it, those are the people who are serious about it. Whereas the people who will just talk about it but won't actually get behind it in writing. So those are some really keys to look for. Larry, anything else on that?
No, not on that one, but whoever it was that looked up Leo Lindbeck III, and the organization they mentioned is not the one I am thinking of. There's another organization that Leo is a founder of and part of, which has the actual Tea Party Patriots and those others organizations who are part of the coalition, and I just can't think of the name of it. I went to my box just now to try and, well, I don't have it anyway. Mark.
Yeah. Well, I want to point out we made a little addition here on our slide. There's also the Florida Fair Tax Facebook group. All 5 of these websites are brilliant, brilliant resources, and we urge you to go there, get involved. You can go to fairtax.org. You can click on grassroots, find a local club, and get involved and invest your time and go and invest your money and get on an auto pay and invest $5 a month, $10 a month, 25, 50, 100, whatever you're comfortable with. But we need the support, and one of the best ways you can help support is come back to this webinar on the 4th Thursday of every month and bring someone else. Talk to your neighbor about it. Hand out a little card, which you could purchase online. Open your mouth. It is one of the best ways that you can get people talking about it. So actually, we just had one last question come in from Richard. We'll take this, and then we'll sign off for the evening. And Richard asks, how are producers of illegal income through their sales compelled to collect tax on their sales? Larry, you want to handle that?
Sure. Well, in the first place, Richard, in order for them to buy something that is not taxed, in other words, they don't have to pay the tax on it when they purchase it, they have to have a state's sales tax exemption certificate. If they don't have that, they're going to pay tax on everything they purchase. Now, the choice is, do they remit that to the state or do they keep it? Well, since they've got the state sales tax certificate, that means the state knows they're in business, and they're going to be watching for those returns. The state is going to be in a much better position to enforce the sales tax than the IRS is in enforcing the income tax. So they will be caught within a very short period of time, and either they're going to pay up or go to jail. Mark?
Yeah. All right. Well, once again, I want to thank my brilliant, loyal, passionate colleague, Larry Walters. I always appreciate you for being here. And, of course, we want to thank the people who took the time out of their evenings to come join us and get educated and join the debate and join the support. And we want to encourage you to not let this be something that you heard that sounded kind of cool. Don't let it stop here. Take this message to your family, your colleagues, your coworkers, your church, your associations, your neighbors, and ask them, hey, have you ever heard of the fair tax? What's that? Oh, it's legislation that exists in Congress right now that would eliminate the income tax. Want to learn about it? Well, yeah, great. Come to this webinar Thursday night, right in your easy chair. That's it, guys. That's the conversation right there. Have that conversation 10 times in the next 3 weeks, all right? So we thank you for being here.
Mark?
We have, yeah, go ahead, Larry.
Hey, I'd like to get something in here. I noticed we have a lot of brand new people here tonight, at least brand new names to us, to me. And I would like to do an inoculation, if I may, a little vaccination here. You may go out tonight, tomorrow, whatever, and talk to somebody whom you respect. Might be a financial advisor, maybe a CPA, a tax preparer, a tax attorney, any number of people, maybe even a lobbyist. and you'll ask them, hey, I learned some things about the fair tax, and it looks like a real good deal. What are your thoughts on it? And they will give you some very logically sounding reasons why it's not going to work, or why it's no good. And I want you to think about this whenever you start hearing that kind of response from somebody that you respected and you brought the fair tax up to. What do they do? And will the fair tax possibly affect their source of income? Because let's face it, ladies and gentlemen, some people are going to lose all of their income. They're going to lose their job in its entirety. And others, like CPAs, will lose a portion of it. Okay? And you have to ask, well, what are you going to do about those people that lose their jobs? There's nothing we're going to do about it, at least that I can write a prescription for tonight as I sit here. But I want you to consider this. In order for America to be a powerful financial nation, we have to have an economy that is dynamic, not static. If it's static, we're dying. It's got to be dynamic. And if it's dynamic, that means it's changing. If it's changing, that means some industries are either cutting back or going away. But new industries are going to be coming to take their place. And new jobs and new types of jobs, new types of education are going to be coming to replace those jobs that are being lost. That's part of a dynamic economy. In most cases, the people that we're talking about that might be poo-pooing the fair tax are those who have already gone through college and have a decent education. Some might even have master's degrees or PhDs. And what I would say is that these people, unlike those who might have worked on a production line in a factory or maybe at a retail counter in a small business or even in a larger store, without the education to get them into a better paying job, these people with the education are going to have a lot better chance to become reemployed than those who don't have the education. So you can feel a little bit sorry for them, but don't be sympathetic, be empathetic. Yes, they lost their job, but they, because of their education and their experience, are in a much better position to find a new job, probably with more pay as our economy grows. Mark?
Well said, Larry. Thank you, everybody. Thanks for staying with us. Again, come back, be active, and let's keep fighting this fight. It's worth it. It's worth it. I've been doing it for going on 6 years, Larry longer than that. So we've got some momentum. We just need to pull together some grassroots and move this thing forward. So we hope you all have a great night, a great rest of your April. Come back and see us in May. Bring a friend, and we'll talk to you all real soon. Take care now.